JOST Werke SE is a global leader in safety-critical systems for commercial vehicles, serving customers worldwide with innovative and reliable solutions. We're happy to have Romy Acosta, Head of Investor Relations, with us today to present the full year 2025 financial results, highlighting performance, strategic progress, and key developments across the business. Romy, the stage is yours.
Hello, everyone. My name is Romia Costa. I am the Head of Investor Relations of JOST Werke SE. Today, I would like to present to you our preliminary results for the fiscal year 2025. The year 2025 was a very volatile year when it comes to the market, especially regions like the US or India and the Pacific region had huge drops in demand when it comes to transport, but also agriculture. Among all these uncertainties, we at JOST managed to post strong results. We grew the business by 44% to 1.5 billion revenues. This was, of course, supported by the acquisition of the Huba Group, which we consolidated starting February of 2025, and which brought in total for the group 468 millions in revenues in the year 2025. However, even adjusted for this effect and for our fix, we managed to grow the business by 2% organically, which given the underlying market trends in transport was a very good achievement for the group. And this was started already to turn in the third quarter of this year and accelerated even further in the fourth quarter, which you see here on the right side of this slide. We grew the business organically in the first quarter by 14%. A lot of the growth came from the agricultural business, which went up by 32% compared to prior year, and even transport also went up by 5% organically. Overall, including the hydraulic business from Huba, the growth was 71%. And this also translated very nicely into our earnings, which in the fourth quarter grew stronger than sales by 95%. We're already starting to see some of the ramp-up synergies that we have achieved over the course of the year, improving the margin of Huba and its profitability. And that reflected in the earnings that we achieved in the fourth quarter, coming up from 8% adjusted EBIT margin in the first quarter of 2024 to 9.1% EBIT margin in the first quarter of this year. And for the full year, we managed to grow the earnings by 29% to 145 million euros. And it was a slight decline in the adjusted margin, but less than expected. The Huba companies are slightly dilutive pre-synergies, and we are now working on our ramp-up of synergies, which should be done by the end of this year, 2026, to bring the group back again above the 10% adjusted margin. That's our long-term guidance. If we're looking into the regions, we see that actually we grew very strongly in all regions, including Huba, of course. When we adjust for the M&A effect and FX, we see that the EMEA region went up by 5%, starting the recovery of both the transport business and the agricultural business in this region after the second half of 2025. Americas was very strongly affected by the North American market, where we saw drops in the market of 25 to 30% in some quarters. Nonetheless, we achieved a minus 4% organically, which was especially supported by very good development in the South American business, but also by market share gains in the US, where we actually profited from our local for local production approach, which allowed us to gain market shares compared to other competitors that do not produce in the US. The APAC region was also grew tremendously. We have to say Huba is very strong in the Asian region, but also at JOST, despite the very weak Indian market and the Pacific region, we grew organically, profiting from our strong position with Chinese OEMs that also boosted sales tremendously in this region, so that compensated for the weakness in the other regions. So overall, very resilient development of the top line, despite all the volatility that we saw in the market. And also from the profitability point of view, we managed to continue to ramp up the synergies in the year 2025 and achieve a very strong earnings in most regions. The EMEA region is the most affected by the Hyva integration, partially because a lot of the SG&A costs, which are something that we will tackle through the synergy plan, is allocated to the EMEA region. So there we are still seeing more dilution than, for instance, in Americas or in APAC. But overall, very well in plan. And that allowed us to actually fulfill our guidance for the year 2025. We ended up growing the revenues by 43.5%, which is in line of our corridor. Adjusted EBIT and adjusted EBITDA growth was at the upper end of the guidance corridor. CapEx around 2.9%, which is also in line with what we expected for the year, and working capital came out at 15.1%, even better than the prior year, despite the integration of the Hyva Group. Something also to point is that we achieved the highest free cash flow in the history with 126 million euros for the first time in the history of the group, also supported, of course, by the Hyva integration. And our leverage came out below 2.5 times EBITDA at 2.26, despite the fact that the acquisition of Hyva was completely financed by debt. So overall, very strong results for the year. Despite the fact that markets were not that supportive, we are seeing a very good turnaround into the market demand in the fourth quarter and expect that to continue into 2026. The signs look good. Our final guidance for the year 2026 will be announced on March with our final results. And on that day, we'll also have a conference call for investors and analysts. So thank you very much for your attention. If you have any further questions, you can always reach out to me under the investor relation contacts. Thank you.
Thank you, Romy, for the comprehensive overview of JOST Werke SE's full year 2025 performance and strategic progress. For investors who would like to explore more, visit Seat 11A to access additional presentations and updates, offering deeper insights into JOST Werke SE's business and long-term value drivers.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.